Good morning. Hope everybody had a great weekend. Hope everybody survived the volatility apocalypse. Just want to make a quick note. I had someone come in my feed and Twitter and get upset with me for saying "suck it, bears." I don't want you. If you're a bear, I don't want you to think that I hate bears or that I'm a bull full time. I do want you to know that I switch back and forth between being a bull and a bear, and the joke was probably out of not tasteful or hurt some feelings. So if I hurt your feelings today, I apologize. Um, I'm not a bull or a bear. I want all of you to know that I do switch back and forth between bull and bear. I hurt bull's feelings just as much as I hurt bear's feelings. Uh, I'm here not to make friends with bulls or bears. I'm here to trade, and I know that's going to hurt people's feelings when they time their trades wrong. So I'm hoping that by posting these daily briefs, the videos that I post on YouTube, that you all become better traders. So I'm not here to fuck over a bear or fuck over a bull or anything like that. So I want you guys to all understand that the reason that I post this stuff is so that you become a better trader. If you're a bull, that you understand how to time the markets. If you're a bear, that you know how to understand the markets. I could care less if you're a bull or a bear. So I just need to get that out of the way. I am going to cut the video short this morning as I did spend some time making one earlier tonight and I had some technical difficulties. So we're going to get right into it, okay? This is your daily brief for Monday, August 2nd. We have a big economic calendar week coming up. The volatility gang is banking on it. But the real numbers that you're going to be looking for are going to be on Friday. Friday, we've got, I believe, farm payroll and unemployment. Those are the two that the banks are going to be looking for. The rest of the numbers this week we'll probably miss on. I don't unless they become material. I think it'll add some volatility to the market, but I really do doubt that it's going to drop the market. What you really want to be looking for is unemployment on Friday and farm payroll. As far as that our infrastructure deal goes, it is intended to keep the market afloat. It is a part of what I was thinking about Friday or Thursday when we lost that bid in the market. That to me looked like a manufactured drop in the market, intended to drop it. It was artificial, and then the bid was put back into the market on Friday and the end of day Friday for trading today. I think that had to do with the infrastructure deal, whether it was actually dead or not. And it was probably a nod or a push towards the Senate to keep it alive, to keep this market alive. That really was corporate America telling the Senate to get something done. Keep that in mind as well as the week progresses. This, as I always say, especially right now, if you are a bull, this is not the time to be long in this market. This is the time for you to be cash. You can go long day trading, but we are coming into what looks like a correction of some kind. Now, we may not correct. We may jump up to a new trading zone up here that I'll put my cursor on. You can take a look up here. We could jump up here. We did in 2020. People that I respect have brought up that we didn't in 2019, but we didn't have quantitative easing in its form today that we did in 2019. That was quantitative easing since 07, 08. But this year and last year specifically, the money is still turned on, whether we want to admit that or not. Also, we had a dip already in July, where we did not have one in July in 2019. Now, do I still think we got a dip this month? More than likely. And even if we don't, it only makes it worse when we do finally get that correction, even if it takes until September. So, as I've been stating all week long, in the past couple weeks at least, is this is not the time to be going long. This is the time to be waiting to go long for a correction. Now, I'm going to show you the SPY, which is what we're taking a look at right here. I'm going to bring this into the 6 month and see if we can come in on this maybe a little bit more. This is the 3 month, and you'll see a shelf forming over here, and there really is a shelf forming to make a move up. You can see it right here. And we've been bound by this channel for the better part of what, 5-6 trading days. As far as day trading is concerned, you know, I'm bearish below this line. This is 437.71. If we settle in around this 433.96, I'll start going long again. I'll scale into it. If we head back down here, I'm going to go all in, or at least, you know, 3/4, 2/3 in for another ride up for the month of August. If we do bounce off this number, though, this 437.71 today, I'm going to look for the banks to take us through this support and launch us up for the rest of the month of August, especially if the infrastructure bill passes. If it doesn't pass, there's a fair chance too we could also trade sideways in the coming week and wait for earnings reports. We do have something crazy like 1,500 to 1,600 earnings reports this week. I just don't see us dropping the market at this time. I did post some numbers on Twitter to take a look at. My expected daily range today for SPY is 439.80, 440.72, 441.67, and maybe even attempt at all-time highs at 442.50. Into tomorrow, maybe even pushing it, or tomorrow or Wednesday if we get that small pullback to get up and trade into a new channel. So the threat is there to move up, and the threat is below to move down. If it was me, I would wait for the banks to make the decision for you today, and that's all I'll say on SPY at this point. I've made 2 or 3 videos over the weekend about this. You can go back in my history, check those out, and see where I stand on that stuff. The next chart we're going to look at is going to be NDX, which is also the NASDAQ NQ. You can transfer this into the Qs. Last week I was getting very bearish with this top here and this rollover. I was looking for more follow through below 14,800. Didn't get that on Friday, and actually we caught a bid later in the day. They rethought their position, I think. I don't know if that was a fake out or not, but as of right now and where it stands, this is a battle zone in here between 14,841 and 14,897. I think if this catches a bid today, that we are going up big, and I think this might be the most dangerous play, but at the same time could print the best this week for a weekly call option if you're a bull, because I do think if we win this battle here in this zone, then we're going to take it up to maybe 15,109 or 15,159, somewhere up in here. 15,109 would be just above this level, and 15,109 or 159. It's way up here. That's a little bit unrealistic. Let's just say it's there, maybe slightly lower. But I definitely think we have a fighting chance to get up to 1,553, 1,500, or 1,500, 15,109. Forget the 1,500, you know what I mean. But 15,109 is on the table. 15,053 would be the low in this one. But somewhere in here, I think we might make a move up into this area. I have some. We took some real hits in some big tech last week. I saw our bids coming in, or at least accumulation phases coming in on some of those tech companies that were getting whacked, like Netflix and Amazon. Apple looks like it has a little bit more room to go up with just a little bit more, and they tend to bleed off after earnings season over the course of a few months. That, coupled with other tech companies that we have earnings on this week, gives me this thought they might pull it back up and pin it again somewhere up in here. Now, there is a lot of downside risk if you get underneath 14,800. If we get underneath there, we're going to start. I'll start calling out some targets on Twitter today. Moving on to the IWM. In previous videos and on Twitter, I already told you guys that expect a little bit of sideways movement in here around 218 and 220. If you can grab any dip down here, you grab it. We did get a dip down in the 220 range on Friday. I posted about going long here around 209, 210. This is a huge resistance or a support zone from in the way back in the past. I rode this all the way up, and I'm still bullish here until 226, 227, somewhere in there. I would look today for a low of 218.08 possibly, but then it's going to rocket up to 223, possibly even 227.07. My bullishness on IWM only extends to somewhere in here around 226. I don't think it continues on. I think it goes into this hold and wait mode. So you don't want to be losing the money that you're making off your calls once you get there. If IWM gets up there, I'm going to pull out from that 226 position, and I think it'll go sideways for the rest of the week, bouncing around with that volatility and waiting on the infrastructure plan to decide where we go in this market. Moving on to Tesla. There's a lot going on in Tesla right now, but there's a few things you need to understand is that banks picked it up down here, drove it all the way up, and they started to average down over time, okay? Just like this. On May 19th and May 21st, I didn't show you this today. I had it on another previous video, but I had some technical difficulties. At any rate, banks did step in and start buying in this area here, in this demand zone. Tesla's usually good for a 10% run, which we just did. Although we had some calls die off on Friday that were 700s, right? So we have 700s and 720s sitting out there for the next week to 3 weeks. Those might print on Monday. We might get this print up on Monday at 720 right at the open and then come back down and consolidate again for another run up. We might hit around 800 on that second run. If we don't hit 720 right out the open, I expect us to still fall back right around this 649, 665, somewhere in here, consolidate for a few days, and then that run would switch from a 720 to an 800. I do without a doubt see Tesla going to 800 this year, if not 1,000. It does depend upon how this plays out. Also, market conditions will impact this move, and IWM, surprisingly. Everyone wants to know why and when Tesla moves. You can track it against IWM. It is highly shorted in smaller indexes. I have posted a few videos on that in the past from some think tank meetings about when this happens. I'm not going to revisit it this morning as I had those technical difficulties, and I need to get this video out so people can get to it. As far as the Fangman stocks, I did a video on those as well. I'm going to try to release that at some point today. Hope you all have a great day trading, and don't get your asses blown out, you know. That's the one thing I want you to know. I didn't mean to go off in the beginning of this video. I really want you guys to understand that I'm not here to hurt bears or bulls. I know I'm going to ruffle some feathers or piss some of you off from time to time. And I'm sure when you see me switch bearish, you're going to kind of say, what am I watching here? So just follow along. I hope this helps you to learn how to time your trades, whether you're a bear or a bull. Have a great day, guys.